Good morning, everyone. Welcome to the Trading Market Technicals morning call video for Wednesday, December 18th. Fed Day is here. Fed announcement will be at 2 o'clock p.m. Eastern Time. And, of course, the Fed chairman will make a comment and speak at 2:30. So all ears will be listening on every word he says. I personally don't think that he's going to do anything. This is his last meeting, and then he is gone. I don't think he's going to disrupt the markets and or Janet Yellen's new approach, and we obviously don't know what it is, but I'm sure from what I'm hearing, it's ultra accommodation, and bond buying is going to continue going into 2014, and that's why I'm going to, in this segment, I just want to look at some of the bonds, and I have some interesting developments. Well, it's been happening for quite some time. I'm not don't like to trade. I don't trade bonds. I'm not a bond guy, but when you're looking at opportunity and the stock market really isn't giving it to you too much because and I'll show that to you in the chart segment as well. We've just been kind of chopping around going into this event. Actually, we've actually sold off going into this event. And this is the first time in probably 5 Fed meetings that we've actually sold off going into that. And I think part of it is because of the end of the year. For the last 4 or 5 meetings, we've actually rallied into the meeting, and then we had sell on the news sort of price action. Maybe this time might be a little different because now we're already down probably 2.5% off the highs, maybe a little less than that, but nonetheless we are down off the highs, so we're coming into a meeting down. So if he says, which I expect him to say, is no further action, and we continue what we're going to do, we may get a little bit of a pop, or maybe even that little whatever you want to call that Santa Claus rally going into the end of the year. And I did mention weeks back, I said, listen, the way this market's been headed up since October, it might be a 50-50 shot, and doing some history research on the markets, and we've really kind of had that so far. So now it's really anything goes. We're on Wednesday. We have another probably 3 full trading days left. We got Thursday. Well, we got a little bit of Wednesday, Thursday, Friday, and Monday. Then you got Tuesday and then Wednesday. Christmas Eve and Christmas Day, obviously, and the rest of that week is probably going to be shot. And then you're going into New Year. So really 4 more days, and then you're going to have some pockets of opportunity. The problem is you have to sit on your hands, and a lot of traders like to continue to be active, and that's not a good thing, especially when you're coming into a major holiday and year-end, and of course the year-end. So I don't think much is going to happen going to the year-end. You may get a day or two of selling, but I really think that's going to be a buying opportunity if you are a longer-term holder. I do think next year we will see probably a decent market sell-off. And I'm going to put a longer-term video together before the end of the year. But we'll get into that at another time. Quickly run down the numbers. Dow Jones down 9. NASDAQ down 5. S&P down 5. Russell down 96 cents. Nothing happened yesterday. And it's really funny. The indexes that we follow, the 5 index we follow, they're the ones that are moving the markets around. And stocks literally are not going anywhere. Of course, there's a handful of stocks like Tesla and Apple and the high beta names, but they're whippy, and that's something that I like to look at, and every once in a while put a trade on. But that's not really what my trading plan does. But you'll see that the stocks are really not moving. If anything, they're ticking lower. The majority of the stocks, the baskets of stocks, the main big nuts and bolts of the market, and it's just really odd. And I'm going to show that to you right now. Let's get right to it. Okay, we see the end of day tick, and as you can see here, we're above zero, but barely. And all it's going to take is one big move to the upside and or downside. And if we get a real big push to downside, tick will start to move down below. Now remember, I'm not just looking at this. The indicators to me is not the next day. It does give me insight for next day, but it's really weeks to follow. So going into the new year, if something doesn't change, I think we might get a decent market sell-off sometime in January, probably following up to the next Fed meeting. Okay, so that's something that I just want you to keep in the back of your mind. All right, stocks above the 50-day moving average continues to deteriorate. Okay, so we really held yesterday. You didn't do anything. The day before had a little bit of a blip, but you see, the internals continue to deteriorate here. Okay, and this is where the internals, the indicators are diverging for what price is doing right now. Okay, so that's something that we need to either reverse and then catch up to what price is doing, which really isn't doing anything much right now. But today will be the day, and then that should dictate the trend going into the next couple of weeks. Okay, but if you see here, we're deteriorating. Okay. New York Stock Exchange, new highs, new lows. We continue to make lower lows and lower highs. Yes, we are above zero, but we continue to make lower lows and lower highs. Not really good. It's not. I want to make a quick point here. The indicators, what I look at, is what gives me confidence in being more aggressive or less aggressive. That's really the nuts and bolts of it. I look at my indicators, and if the indicators are saying, well, there's something wrong here, we're diverging, well, you know what? I'm going to maybe hold stocks a little bit less, not hold overnight, and just be more playing defense, if you will, when you're day trading or when you're swing trading for a day or two. When you the longer term picture, you really need to be. That's something that if I was holding stocks for the longer term, I'd be hedging my bets right now. Okay, let's take a look at the new low. And as you can, this is a very important chart for me right now. And as you can see, we continue, we're ticking, right? We're ticking up, we're up 9, no big deal, but we're making higher highs and higher lows on this. This is not a good sign. Okay, so something that I want you to be aware of. Okay, now, interesting. Gold today is going to have a big move either way, no question about it. We're going to have either a big move up and or down in gold. So me personally, no trade for me. I'm looking right up in here, somewhere around the 50-day moving average to look to start initiating a short position. I do think gold will get hammered. I think gold, you will see gold down 30, 40 points at one morning when you wake up, and then that flush really needs to start being bought. And if you can buy that flush, that's if you're looking to buy gold, wait for the big flush. It will happen, trust me. Okay, USO. USO entering a little, I like to see a little more downside. We see the bullish percent ENER. We're at 61%. I'd like to see it push down a little bit lower, maybe get a washout in the USO, which would be obviously crude oil, the CL. We're up about 14 cents right now. So something like that we need to really watch and pay attention to. Okay, no trade at the moment, but I do like crude oil or the USO higher on the next pullback. Okay, now let's take a look at the VIX. And remember, the VIX, and I've been showing this to you for years now, we're still hovering that band. I want to see the VIX jump out of that band and then the next day close. We have not gotten a buy signal in equities as of yet. So if this is a very important indicator, and I look at this on a regular basis along with the tick. This indicator here is something that you need to continue to watch. Now, if we break outside that band, the next day we close in, that's a buy signal for equities. Okay, so just keep that in mind. Now, interesting. Let's take a look at the long bond, the 30-year. We had this head and shoulders pattern. This is a weekly chart now, guys. Okay, we had the pattern here, and now look at what's happening. We're breaking down again, and we're coming right into this last-ditch support here, okay? This is the long bond on a weekly chart, okay, the USB. This is the 30-year Treasury bond. We're breaking down. We continue to break down. I think that bonds are going to go much lower, and I'm going to show you. This is the TLT weekly, and you can play bonds by trading the TLT. Okay, now this is a weekly chart of TLT. Now here we have our volume profiles, and here's the way back here, we have our last ditch support. So if we break this TLT, you're going to see 97. And I did a little bit of going to the Trader's Almanac. We come into some seasonal weakness between now and April, beginning of May. So to me, this is going to set up to be a good short. One question that remains is the Fed. We don't want to do anything today. You want to start looking at what TLT, any bounce in TLT up to the 105 area would be a perfect position to get to position yourself short with, of course, your stops above this local high here. Okay. Now, if we break down, the next back test of this support area would also initiate a short. And this is what I'm going to be looking at TLT weekly on the bonds. I think bonds are in big trouble. Let me bring this picture back here. If you looked at the bonds here, and this is a weekly chart. Here's a 200-week moving average. Here's what makes this different now. You had a break lower in the beginning of 2011, and we shot right back up again. We actually tried it And look what happened. We shot back up again, and we didn't break. And this is, you figure what, 1, 2, 3 weeks, 1, 2 weeks. What happened is we had a huge rally all of 2012, a good part of 2013. Then we started breaking down. What happened is we came above it 1, 2, 3 weeks again, right? Good symmetry, and then boom, we failed. We back tested, and we can't even get above the 200 bar moving average. This, to me, bonds are in big trouble. And you have the 50-day crossing the 50-week, crossing over the 200-week. That's going to be the death cross. And if once you see that, fund managers are going to continue to sell bonds, take their money out of bonds, and where you're going to put it? You're going to put it eventually into the market. Do I think the market goes higher in 2014? As of right now, yes, I do. With some pockets of weakness, okay? And that weakness needs to be bought. And again, I'll go into that in a longer term video. But TLT, here's the daily chart. As you can see here, I'd be a seller anywhere in here underneath that 50-day moving average. And of course, if you're wrong, you could put your price action above this local high in here, which come about 105.50, okay? So that's the TLT. So that's going to be something I'm going to be watching as well. Okay, and again, USO, just letting you know, this is the area where I like it. You can see here, we have that 20-day moving average, and of course, this little area of resistance, which is now support. 34.30 would be my first buy-in in the USO. GLD, again, we spoke about this. Anywhere above the 123, underneath that 50 would be a first target area to get short. And then, of course, you could actually even, you're going to have pockets of resistance here, of this gap area of resistance. So 101.25, you could even start legging into a short all the way up in here. Your stops would be above, right above that 200-day. By the time that does happen, the 200 period would be coming down here, which would probably coincide nicely with this local top here on that right shoulder, okay? And just go right through the indices. Spiders here holding up well, below the 20, above the 50. Okay, but looking here, this thing could go either way today, guys. Personally, I don't trade Fed pre and post day, only because it's just basically it's a cowboy session. Markets are just wild, whippy, no volume. There's no sense of trading something like that. Most pros don't even bother looking at it until after, probably by tomorrow. But again, remember, you also volume is definitely tapering off every day as we get closer to the Christmas holiday. Diamonds, okay, same thing. Above the 50, below the 20. This here actually is flagging. If you see here, we had a flag here, and we have another flag here. So a flag we broke. Flag. Could this be possibly that we're going to break this time again? We shall see, but it does not look pretty at the moment. And again, remember, another thing I wanted to point out, and I mentioned many times in Fed Day, that usually whatever happens on Fed Day, we usually get a reversal the next day for some reason in the morning, and then we usually kind of continue. Here's the transports. We had here, we have another bear flag. As you can see, this bear flag we had, let me just move that lower, right? We had a bear flag, we broke. And same thing with the Dow. We have another bear flag. Are we going to break? Pattern recognition. Now, we could obviously break to the upside, and this could be a failed bear flag, but we've had 2 already in a row. We've actually had 1, 2, 3, 4 in a row. So this could break, and we're, again, pattern recognition, below the 20, above the 50. The charts don't look too great. However, they're still hanging above the upper end of the range. So still bullish. Okay? IWM, above the 50, below the 20. Again, pattern recognition, same thing. Now one of our leaders here, right? Transport, same thing. It's doing the same thing. So, bear flag. Are we going to break lower? Well, it seems to me that the pattern is pointing for lower prices today. But again, because it's Fed Day, news can trump the charts, and anything goes here for today. And, of course, the XLF. Now, the XLF, the banks really took it on the chin, and I was really surprised about that. But there was some news out on, I think it was part of the Volcker rule or something like that. I'm not too sure. But I tell you, wasn't impressed by the price action in the banks yesterday. I do like the banks. I think the banks are a buying opportunity, especially if we can get a little bit lower prices. I would be scaling into JP Morgan, Wells Fargo, and Citi. That's what I like. And as you can see, Goldman actually held up really, really well here. Okay, and we have JP Morgan. JP Morgan, we did not break out of that bear flag. Now this to me, the bull flag, this to me is acting more like a downtrend channel. Okay, so we're holding up well. I like to continue to hold above the 50, but more so above this little gap area of support. And that, to me, again, is going to be a buying opportunity here in JP Morgan. Here's a networking tech picking up nicely. And then, as you can see, Apple still holding this area, just slightly just grinding lower and creating a bull flag. Right? These are powerful patterns. If you can identify them and trade them, and know how you trade them, they're powerful patterns. If we can break down a little bit more, maybe that 20 catches up here, that would be a great opportunity. If we break out of that that bull flag, at 562.50, that would be a good spot to get long. And you're obviously your stop would be below the flag, and of course Qs lastly. Okay, all right, guys, let's see what happens today. Be really safe out there. If you don't have to trade, just take a step back. I find it more productive by watching price action, watching setups that you're looking to get into, stalking some of your stocks that you want to trade today than actually physically taking on position. Now, obviously, if you have a fantastic setup, definitely take it, of course. But, keep your stops tight. And I would be literally flat going into 2 o'clock today because, again, anything goes. News trumps the charts. And Ben Bernanke, I call him the madman, has proven to actually shake up the markets when unexpectedly. So just, keep that in mind. Have a great day, everybody. We'll speak to you tomorrow. Take care.